Hello, today is the 30th day of March 2013. Welcome, and I have some data from the LBMA for the silver price they have. And when we look at these numbers in here, they're all in the 28s, low 29s, show that the volatility has been extremely light pretty much since the 20th day of February. So what we're going to do is we're going to take the maximum of the values. So we'll go to this here. So over 27 periods is what we're going to check. So the max over 27 has been 29.25, and the minimum over the same 27 period is 28.01. As far as the difference of the two, we'll take high, subtract low, and divide the low again, which will give us a volatility, which in this case is about 3.5%. So we'll put this in percentage of form. There we have it. And if we just copy a few of these like that, then obviously the calculations aren't working because they should not all be. Okay, let me just try this again. There's had to have been a basic error that is going to get fixed here. 4.43%. And higher. Okay, there we go. Now we have it. So we have high minus low divided by low, which gives us 4.43%. Now this data goes all the way back to 1968. Let me just scroll all the way up. There we see that. And what we'll do is we'll copy and paste this a bunch or many different cells higher. Say to here, for example. And none of these are 4%, but that's 4.89. That's still lower. What we want to do is we want to find the last 27-day period lower than this. That's what we're looking for now. So we'll give it the question, if this number is equal to, say, if this number is less than this in here, then give us a 1. If not, give us a 0. Okay, that's simple enough. We'll put a dollar sign on this here because we want to keep it the same. So it's going to always ask, is it lower than 4 point? And we'll just paste this all the way up to the very top where we started this. And that would be cell 124. So we just type it in on the top part here and paste it. So now we're going to ask the question here is, if this number here is equal to 1, then we want the new date, which is this here. If not, we want the previous one, which would be here, which would be absolutely nothing. So what's going to happen here, I'm going to copy and paste this all the way down, and what's going to appear is the last date in which it happened. And that is July the 7th, 2003. This is the last time that we have had 27 sessions lower than 4.43%. So let's go up to that time frame now. Okay, so this is where it was at 3.91%. So again, I've talked a lot about this time frame here. So let's take a look at what the charts look like at this time frame. So we'll just draw a quick line chart just for something to do. And we'll show what the this is what the last few periods was doing. It was just going a whole bunch of sideways nonsense in a range of 450 to, well, really 460-ish. That was pretty tight. And how did it break from this point forward? Well, we'll just say put in another 1,000 days and put the scaling on so we can see it a bit better. Obviously, it had broken out from this miniature volatility. Now, as I continue further within the spreadsheet, I'm looking at these past dates, and I found something very, very interesting now. So I'm going to continue this video, of course. We can see here we got 2000 as periods where volatility was lower than we had now, 97, and that lasted for a while, 96, 94, 93, 92, 91, 90, 89, 87, 86, 85, 79. So apparently, on January the 16th, 79, volatility was very low again. So let's take a look at that time frame and see how unvolatile things were back then. Again, we'll do the same thing. We'll put up a quick little chart. Expand the ranges just a little bit. So at that time frame, it was within the uptrend, just doing this sideways movements in here. And if we take, say, I don't know, 30 periods after it, we can again see that it was starting its uptrend again. And pretty decently at that, too, where it was just doing this whole bunch of nothing. In fact, we can see here that this is the breakout point. We can look at this. This is like period number 95. So that's little over 2,800 on the row number, which would be the breakout occurring on January the 16th, or really when this thing had its 4.14% taken care of. January 17th is basically when it happened, because we can see that this low volatility happened on a day where it gained 15 cents, which was a little over 2%. Then it went sideways for a day, had a small gain here. And then it was up about 8 cents. That's a little over 1%, I should say, down a bit. There's a 14-cent up day from here to here. And there's another 10-cent day. These are 1.5% kind of days. And then, of course, going from 660 to 707 on February the 5th, that was a move of 46 cents, which is about 6%. So wanted to point that out as well, and take care.